Financial storm or golden opportunity, everything depends on your decision. The market has never been a murderer. It is ambiguity, lack of preparation, and delusion about luck that push investors to the edge. People often blame financial storms, sudden crashes, or accuse major players of manipulating the market. But the harsh truth is, small fish don't die because of big fish. They die because they swim aimlessly into whirlpools without even realizing it. Imagine a chess game in its final stage. Pawns have been sacrificed, knights have fallen. Only one move remains checkmate or collapse. June 30th is that move the final deadline for the U.S. to deal with over $6.5 trillion in maturing debt, most of which was borrowed at nearly zero interest during the COVID era. Now they must either pay with cash they don't have or refinance at an interest rate of 4.5%, like a blade slashing through every dollar of the budget. The whole world is watching a cruel choice unfold: preserve national credibility or sell out the future to save the present. And if you're an investor, you can't sit this out. This move will determine where capital flows, which markets collapse, and who survives the financial tsunami. The clearest image of June 30th is a ticking time bomb hidden in the basement of the global market. Above ground, the lights are bright, indexes are green, and U.S. economic reports remain optimistic. But below the surface, pressure is building. When the bomb explodes, interest rates will surge, the dollar will weaken, and the Fed will be forced to release liquidity. This entire scene is staged a carefully scripted play. Only those alert enough will recognize the signs. Ironically, most of the public is sitting in the front row, watching the play intently, unaware they are part of it. Like a meticulously arranged chessboard, the U.S. cannot repay, the Fed must intervene, bonds plummet, gold spikes, the dollar crashes, and those holding USD will drown. This chain reaction isn't random. It's guided by a detailed plan, with June 30th as the start button. Entrepreneurs understand the feeling: debt due, money not yet returned, pressure tightening like a noose. If a small business collapses, a few hundred people are affected. But if that business is the United States, the entire global financial system trembles. Whether you invest in gold, real estate, stocks, or just deposit money into a bank account, you are on the chessboard. The question isn't whether a crisis will happen. The question is whether you're prepared. Because markets don't kill people, it's lack of strategy, understanding, and reliance on luck that causes self-destruction. The lesson of 2008 is still fresh. The slap of 2020 hasn't healed. And 2025 may be the moment you rise strong or fall for good. We're not simply repeating history. We're entering a full-scale upgrade, more complex, faster, and with deeper, broader impact. In 2008, Lehman Brothers' collapse was just the surface. At the core, bad debt, dependence on leverage, and an asset bubble, inflated by prolonged low interest rates. When the system cracked, assets plummeted, markets panicked, and the Fed had to step in with massive money injections as the last life raft. In 2020, the pandemic wasn't the cause, it was the wake-up call. Again, liquidity flooded the system. Rates hit zero, and the world survived on stimulus. But the price was inflation's return. Cheap money fueled speculative madness, values soared sky high without reason. By 2025, it's no longer a coincidence, it's a directed script. A pre-programmed crisis where every collapse is intentional, every move staged. We only realize we're pawns once we're sacrificed. And the first move of this game? The weakening of the U.S. dollar. Since late 2024, the USD index has fallen over 10%. It's not an accident, it's a calculated move. The U.S. is allowing the dollar to weaken to ease debt pressure. For every 1% drop, America wipes away hundreds of billions in obligations, a smart move for Washington, but a nightmare for the rest of the world. Next is the cyclical breakdown. U.S. Treasury bonds once seen as risk-free are now crashing. Why? Because near-zero interest debt, from the past is being replaced by new loans at rates above 4.5%. Meanwhile, China and Japan, America's top creditors, are quietly fleeing the bond market. When the sellers are wealthy nations, the first to suffer are the most vulnerable. Then comes the global asset crisis. We're witnessing the biggest capital flight from financial markets since 2008, from U.S. equities to real estate to corporate bonds. Everything is being devalued, liquidated. But this time, the shock doesn't end with credit. This is a full-scale reassessment of global value. A massive system overhaul disguised as crisis. Every timeline since late 2020 aligns perfectly with an invisible blueprint. Tightening policies, weakening dollar. Q1 2025 gold prices surge, instinctive reaction to instability. June 6.5 trillion debt maturity. July global tariff hikes return. And after that, a double-edged asset crisis, where both currencies and speculative assets collapse. The real danger isn't that a crisis will occur, it's that the crisis is a tool for redistributing global assets. If you don't understand what's happening, you won't just be swept away, you'll become fuel for the machine. Don't ask, will the market crash? Ask, who designed it, and what do they gain when the dust settles? Because in every crisis, some lose everything and others collect it all at rock-bottom prices. Trump's repeated attacks on the Fed may seem chaotic, but look closer and you'll see a strategic mind at work. He knows the Fed won't cut rates because of a plea. They only act when forced by reality. In finance, there's an unwritten rule: no pressure, no action. Trump understands this better than anyone. He doesn't need the Fed's approval. He applies economic pressure to trap them. Either they act to save the system or let a wave of defaults destroy it. Now the Fed is caught between two opposing forces. One side, Wall Street elites holding trillions in short-term assets, needing high interest to maintain profits. The other, a U.S. government desperate for cheap capital to spend, repay debt, and maintain liquidity. The Fed can't please both. Keep rates high, the government collapses. Cut rates, investors' assets crash. History shows the Fed never acts quickly for the people. They only move when Wall Street bleeds. In 2008, banks collapsed. The Fed rushed to print money. In 2020, the pandemic hit. The liquidity gates flew open. But small businesses, workers, and retail investors, they got help only after devastation. Trump knows this. He doesn't beg the Fed. He does what the market fears most. He breaks trust. As bonds collapse, stocks sink, and recession looms, the Fed is left with no choice but to act. Not out of compassion, but because those in real financial power start losing money. Capitalists never sit still. They've already shifted assets from stocks to short-term bonds, from USD to gold and strong currencies like the yen. They know the collapse is coming, and they'll be the ones buying everything at 110 of its value. If you think Trump doesn't understand the financial system, you're underestimating a seasoned investor. He's gone bankrupt, been buried in debt, and come back. He knows to build a new empire, the rotten foundation must be destroyed. The U.S. financial system is rotting from within. Its pillars are cracking. The only question left: trigger a controlled collapse now, or wait for a total meltdown. Trump chooses the explosion with a plan. Force a breakdown. Make the Fed ease. Drop interest rates. Open the floodgates. As panic selling sweeps the market, he comes back to buy it all cheap. But in this grand game, the ones forgotten are the everyday people. Retail investors holding onto their portfolios don't know they're sitting on a bomb. They're being dragged into a war where the deadliest weapon is delayed awareness. The elites have picked their side. Trump has picked his. Have you picked yours? As the dollar weakens, the first impact hits import prices. Vietnam, for instance, is highly dependent on imports. Fuel, fertilizer, electronics, medical gear, machinery, nearly all bought with USD. As the dollar falls, exchange rates rise. Importers struggle. Consumers suffer as prices surge. Look around: fuel, medicine, construction materials, prices are soaring. This isn't random. It's the direct result of a weakening dollar and imported inflation from major economies. And when the greenback drops, other countries devalue their own currencies to stay competitive, igniting a global currency devaluation war. The result? Everything becomes more expensive. Wages stay the same. Purchasing power shrinks slowly, painfully. And then comes the U.S. Treasury bond bomb. It may sound distant, but the impact is near. Many funds, insurers, even Vietnamese financial institutions hold these bonds. As values fall, the damage ripples outward. Banks tighten lending. Businesses face credit crunches. Financing costs soar. And once again, it's ordinary people who lose the most. Saving in the bank? Your interest may not outpace inflation. Investing? Your assets may be silently bleeding. This is no longer a distant, abstract issue. It's a very real game, and your wallet is already on the board. If you don't recognize the shift, you're not watching from the sidelines. You're lying on the runway as the financial storm sweeps through. In the end, the choice is yours. Keep clinging to illusions of stability, or prepare a strategy to survive, and seize opportunity in the chaos. Because in every crisis, those who lose are the ones who sleep through the battlefield. The ones who win? They're the ones who were already awake long before dawn.